You know what is interesting right now? While you are watching this video, there is a letter that could be sitting in your mailbox or headed there this week that talks about money the government might owe you. And I am not talking about some pie in the sky. Promise, I am talking about real payments up to $2,000 that are connected to Social Security, SSDI, SSI, and programs for folks on low income. Now here is the deal. The government does not exactly advertise this stuff with a big neon sign. They send letters, they update policies. And if you are not paying attention, you could miss out on money that is rightfully yours. We are talking about stimulus payments that got overlooked, dividend-style rebates from state programs, and adjustments to benefits that are happening right now. In 2025, I have been helping people take control of their money for decades. And let me tell you, knowledge is power when you understand what is actually available, what these letters mean, and how to respond to them. You put yourself in the driver's seat. So let us cut through the confusion together and figure out exactly what is going on with these payments, who qualifies, and what you need to do next. Look, I want to start by being crystal clear with you about something. When we talk about these payments, we are not discussing some magical windfall that is going to solve every financial problem you have ever had. What we are discussing is money that is either part of legitimate government programs or adjustments to benefits that you have already earned through years of paying into the system. And that matters because too many people either ignore these opportunities thinking they are scams or they get their hopes up about amounts that are not realistic. So let us walk through this together step by step, like we are sitting across the table from each other having coffee. First thing you need to understand is that there are actually several different types of payments floating around right now, and they are all getting lumped together in conversations, which creates confusion. You have got potential stimulus payments that some states are still processing from previous federal programs. You have got what some states call dividend payments or rebates, which are essentially giving money back to residents based on budget surpluses or specific state programs. Then you have got adjustments and supplements to Social Security, SSDI and SSI that happen because of cost of living increases or corrections to underpayments from previous years. These are all different things, but they are all real, and they all involve actual money that could end up in your bank account or mailbox. Now, when it comes to Social Security, specifically, let me tell you what has been happening every year. There is supposed to be a cost of living adjustment, and for 2025, that adjustment is happening. But here is where it gets interesting. The Social Security Administration has been going back through records and finding cases where people did not receive the full amount they were entitled to. In previous years, maybe there was a calculation error, maybe your earnings record was not updated properly, maybe you were supposed to get a supplemental payment and it fell through the cracks. When they find these discrepancies, they are required by law to make it right. And that is where some of these letters are coming from. They are not just telling you about your regular monthly benefit. They are telling you that you are owed back pay and that back pay can add up quickly. Let us talk about SSDI for a minute because this is where a lot of folks get confused. SSDI, Social Security Disability Insurance, operates on the same basic framework as regular Social Security retirement benefits you paid into the system through your payroll taxes, and now you are drawing from it because of a qualifying disability. The same cost of living adjustments apply, the same potential for underpayments and corrections applies. But here is something a lot of people do not know if you have been on SSDI and you are approaching retirement age. There can be some interesting transitions that happen with your benefits, and sometimes those transitions come with lump sum payments to reconcile the difference between what you were getting on disability and what you should be getting. Now, the government does not always explain this well in their letters, which is why people panic or get confused when they see different numbers than they expected. SSI supplemental security income is a whole different animal. And I want you to understand this because it is crucial. SSI is not based on your work history. It is a needs-based program for people who have limited income and resources. The federal government sets a base rate, and then individual states can add their own supplement on top of that now. Because SSI is needs-based, the government is constantly checking your income and resources to make sure you still qualify and to make sure you are getting the right amount. And just like with Social Security and SSDI, they sometimes discover they have been paying you too little. When that happens, you get a correction payment. Sometimes it is a few $100s. Sometimes, if the error went on for months or even years, it can be a couple $1,000s. That is real money that can make a real difference in your life. Here is where the state programs come into play. And this is important because not every state does this. Some states, particularly those that have had strong budget surpluses or specific revenue sources like oil or natural resources, send out what they call dividend payments or rebates to residents. Alaska is probably the most famous for this with their permanent fund dividend, but other states have done similar things. California sent out middle-class tax refunds. Colorado has had Tabor refunds. New Mexico did rebates. These are not federal programs. These are state-level initiatives, and the qualification requirements vary wildly from state to state. Some are based on income, some are based on whether you filed a state tax return, some are specifically targeted at seniors or people on fixed incomes. The key thing is that if your state is doing one of these programs, they will send you a letter explaining it. Do not throw that letter away thinking it is junk mail. Now let us talk about the low-income piece of this puzzle, because this is where things get really interesting and where a lot of people leave money on the table. There are federal programs and state programs specifically designed to help people with limited income, and many of them tie into your Social Security SSDI or SSI status. For example, there is something called the Extra Help Program, also known as the Low-Income Subsidy, that helps pay for Medicare prescription drug costs. If you qualify for this and you were not enrolled, you could be owed retroactive payments. There are energy assistance programs, sometimes called LIHEAP, that provide cash payments or credits to help with heating and cooling costs. There are property tax relief programs in many states for seniors and people with disabilities. All of these programs have different qualification thresholds, and many of them will send you letters if they determine you might be eligible based on information shared between agencies. Here is the thing that frustrates me, and I have been doing this long enough to see it over and over again. The government is terrible at communicating this stuff in plain English. They send you a letter that is full of bureaucratic language and reference numbers and codes, and they expect you to understand what it means and what action you need to take. And if you do not take that action within a certain time frame, you might miss out on money that is yours. I cannot tell you how many times I have talked to someone who threw away a letter from Social Security or their state Treasury Department thinking it was a scam, only to find out later that it was legitimate and they missed a deadline to claim a payment that is heartbreaking and it is unnecessary. So what do you do when you get one of these letters first? Do not panic. Second, do not ignore it. Third, verify it is legitimate before you respond. Here is how you verify it. If it is supposedly from Social Security, do not call the number on the letter. Instead, go to SSA Gov or call the main Social Security Administration number that you can find on their official website. Tell them you received a letter and you want to verify. It is real. They can look up your account and tell you immediately whether there is something pending. If it is from your state, same principle. Do not use contact information from the letter. Look up your state's official, Treasury or Revenue Department website and contact them directly. It takes an extra 10 minutes, but it gives you peace of mind and protects you from scams. Let me tell you about the scams for a minute because they are out there and they are getting more sophisticated scammers. Know that seniors and people on fixed incomes are watching for information about stimulus payments and benefit increases. So they send fake letters, they make phone calls, they send text messages, they are trying to get your Social Security number, your bank account information, or they are trying to get you to pay some kind of fee to process your payment. Here is the absolute truth. The government will never ask you to pay a fee to receive a benefit payment. They will never ask you to provide your full Social Security number over the phone if they called you. They will never threaten you with arrest or loss of benefits if you do not act immediately. Those are all red flags. If you encounter any of those things, hang up, delete the message, throw away the letter, and report it to the Federal Trade Commission. Now let us get into the actual amounts we are talking about, because I know that is what is on your mind. The $2,000 figure in the title is not random. It is based on the upper range of what some people are receiving when you combine different payments. For example, if you are owed back pay from a Social Security calculation error that went on for 6 months and each month you were underpaid by $200, that is $1,200 right there. If your state is sending out a $600 rebate to seniors, you are now at $1,800 if you qualify for a one-time energy assistance payment of $300. You have crossed $2,000. Now, does everyone get exactly $2,000? No, some people get more, some people get less, some people do not qualify for any of these things. But the point is that these are not tiny amounts we are talking about for someone living on a fixed income. An unexpected $1,500 or $2,000 can be the difference between keeping the lights on and going into debt, or finally getting that medical procedure you have been putting off, or just having some breathing room in your budget. The cost of living adjustment for 2025 is another piece of this that we need to address head-on. Social Security recipients saw an increase in their monthly payments starting in January 2025. The exact percentage varies based on inflation calculations, but we are talking about a meaningful bump in your monthly check. Now here is where people get confused. That increase is automatic. You do not have to apply for it. It just happens. But what you might need to apply for, or at least verify, is whether that increase was calculated correctly based on your specific situation. If you worked while receiving benefits, if you have dependents, if you are receiving both retirement and survivor benefits, the calculation gets more complex, and that is where errors can creep in. Here is something else that is happening right now that you need to be aware of. There are programs at the state level that are specifically targeting seniors who might be eligible for benefits but are not enrolled. Some states have hired outreach workers or created online portals where you can check your eligibility for multiple programs at once. This is a good thing. This is the government actually trying to get benefits to people who qualify instead of making you jump through hoops, but you have to take advantage of it. You have to go to your state's website and look for these resources. You have to fill out the applications. Nobody is going to do it for you. I want to circle back to something important about SSDI and SSI specifically, because there is a policy change that has been rolling out that affects how resources are counted. For the longest time, the resource limits for SSI were ridiculously low. We are talking $2,000 for an individual, $3,000 for a couple. Those limits had not been updated in decades, which meant that people were being disqualified from benefits because they had a small savings account or a car that was worth more than the limit. There have been some adjustments to how certain resources are counted, and some states have eliminated resource limits altogether for their supplement programs. What this means practically is that some people who were previously over the limit might now qualify, and some people who are currently receiving benefits might be eligible for a higher payment amount. And if that change in calculation means you should have been getting more for the past several months, you are owed that difference in a lump sum. Let me talk to you about Medicare for a second, because it ties into all of this. Your Medicare premiums are typically deducted from your Social Security check when there is a cost of living adjustment. Sometimes the Medicare premium increases too, which can eat into your raise, but there are protections in place, called hold harmless provisions, that prevent your net Social Security payment from decreasing because of Medicare premium increases. If you are affected by this, the calculations can get wonky, and sometimes it results in you being owed money or getting a different payment structure than you expected. Again, this is where those letters come in. They are trying to explain what is happening with your specific situation. The other thing I want you to understand is that some of these payments are taxable and some are not. Social Security benefits themselves are sometimes taxable depending on your total income. Stimulus payments generally have not been taxable. State rebates vary by state. Corrective payments for underpayment of benefits usually have the same tax treatment as the original benefit. This matters because you do not want to spend money that you are going to owe taxes on come April and then be caught off guard if you receive a lump sum payment of any significant amount set aside, at least 20 to 30% of it, until you can talk to a tax professional or use tax software to figure out what you actually owe. I have been helping people with their money for a long time, and here is what I know to be true. The system is complicated on purpose, not because there is some evil conspiracy, but because it was built piece by piece over decades by different administrations and different Congresses, and nobody ever went back and simplified it. That complexity creates opportunities for things to fall through the cracks, and it creates opportunities for people to miss out on benefits they have earned. But it also means that if you are willing to do a little homework, if you are willing to read those letters carefully, if you are willing to make some phone calls and ask questions, you can make sure you are getting everything you are entitled to. So, here is what I want you to do after you finish watching this video. First, check your mail carefully for the next few weeks. Do not throw away anything that looks official without opening it and reading it. Second, create an account on SA.gov if you do not already have one. This lets you see your benefit information, your payment history, and any messages from Social Security. Third, go to your state's Treasury or Revenue Department website and look for information about rebates, refunds, or assistance programs. Fourth, if you are on SSI or you are low income, look into your state's benefit enrollment programs to see if there are other programs you qualify for. And fifth, if you get a letter about a payment and you are not sure if it is legitimate, verify it through official channels. Before you do anything else, these 5 steps do not cost you anything except a little time now to delve deeper into this matter as presented by USA Secure Benefits. It is essential to recognize that the current landscape of government payments in 2025 involves a multifaceted array of opportunities that many individuals may overlook due to lack of awareness or misunderstanding. The initial point about letters arriving in mailboxes underscores a critical reality. These communications from official entities are not mere suggestions, but notifications of potential entitlements that stem from established programs tied to Social Security, SSDI, SSI, and various low-income initiatives. The absence of aggressive advertising by the government means that proactive attention is required to avoid forfeiting funds that are legitimately due. This includes overlooked stimulus payments, state dividend rebates, and benefit adjustments, all of which are active in the present year. Drawing from decades of experience in financial guidance, it becomes evident that empowerment through knowledge is paramount. Comprehending the availability of these resources, the significance of incoming correspondence, and the appropriate responses thereto positions individuals to actively manage their financial outcomes, thus collaboratively navigating the complexities to clarify the nature of these payments. Their eligibility criteria and subsequent actions is imperative, commencing with transparency. These payments do not represent an illusory panacea for all fiscal woes. Rather, they constitute funds from authentic governmental schemes or rectifications to earned benefits. This distinction is vital as it counters the tendencies to dismiss them as fraudulent or to harbor unrealistic expectations regarding their magnitude. Approaching this systematically as if in a direct dialogue facilitates a thorough understanding. The diversity of payments currently in circulation contributes to widespread confusion. Categorizing them reveals potential stimulus disbursements still being handled by certain states from prior federal efforts, dividend or rebate mechanisms in states redistributing surpluses or targeted funds, and enhancements to Social Security, SSDI, and SSI arising from inflationary adjustments or rectifications of past underpayments. Each category is distinct yet substantive, potentially leading to tangible deposits or checks focusing on Social Security. Annual cost of living adjustments are standard, and for 2025, such an increment is in effect. Notably, the Social Security Administration conducts retrospective reviews, identifying instances of incomplete disbursements due to errors in calculations, outdated earnings, data, or missed supplements. Legal obligations compel corrections, prompting letters that detail not only ongoing benefits, but also accrued back payments, which can accumulate substantially, shifting to SSDI. This program mirrors the structure of retirement benefits, funded via payroll contributions and accessed upon disability qualification. It shares adjustment mechanisms and vulnerability to underpayment issues. A lesser-known aspect involves transitions near retirement age, potentially yielding lump sums to align disability and retirement entitlements. Official explanations in letters often lack clarity, fostering anxiety over discrepancies in figures. SSI differs fundamentally as a needs-oriented initiative, independent of employment history, with federal baselines augmented by state contributions. Ongoing verifications of income and assets ensure eligibility and accuracy, occasionally uncovering underpayments, leading to corrective disbursements ranging from modest sums to thousands, depending on error duration. Such corrections represent meaningful financial relief. State programs add another layer, not universally implemented, but prominent in resource-rich or surplus states, like Alaska's permanent fund dividends or analogous efforts in California, Colorado, and New Mexico. These vary in criteria from income thresholds to tax filing status, often favoring seniors or fixed-income recipients. Letters from these programs warrant careful review rather than dismissal as unsolicited mail. The low-income dimension amplifies potential oversights with programs interlinked to Social Security variants, including the Extra Help program for drug costs, potentially yielding retroactive reimbursements, energy aid via LEHEAP and state property tax relief. Eligibility notifications may arrive via interagency data sharing. Yet governmental communication often employs opaque jargon, necessitating interpretation, and timely action. Failure to respond can result in lost entitlements, a pattern observed repeatedly. Verification protocols are straightforward: eschewing letter, provided contacts in favor of official websites or numbers for Social Security and state departments. This safeguards against fraud while confirming authenticity. Scams exploit anticipation of payments, employing deceptive tactics to extract sensitive information or fees. Genuine programs impose no such demands and eschew threats, prompting immediate reporting to authorities. The referenced $2,000 threshold derives from composite scenarios, such as 6 months of $200 monthly Social Security underpayments, equaling $1,200, supplemented by a $600 state rebate and $300 energy grant. Variations exist, but the sums are consequential for budget-constrained households. The 2025 cost of living adjustment automatically elevates monthly Social Security amounts based on inflation. Yet, verification of accuracy is advisable, especially in complex cases involving employment dependence or dual benefits. State outreach initiatives facilitate eligibility checks for unenrolled individuals through dedicated personnel or portals, demanding user initiative. Policy shifts in SSI resource evaluations have relaxed outdated limits, potentially requalifying individuals or enhancing payments with retroactive lump sums. Medicare interactions deduct premiums from benefits with safeguards against net reductions due to premium hikes. Letters elucidate these dynamics. Tax implications vary, with Social Security potentially taxable based on income, while others like stimulus are exempt. Advising reserve funds for potential liabilities. The system's intricacy, accumulated over time, fosters errors but also rewards diligence in reviewing mail, accessing online accounts, researching state offerings, exploring enrollment options, and verifying communications. These measures, as advocated by USA Secure Benefits, empower individuals to secure deserved benefits without undue expenditure of resources. Expanding further on this analysis, the essence of these notifications lies in their role as conduits for rectifying systemic oversights, ensuring that contributions to Social Security and related programs yield appropriate returns. The stimulus remnants from prior federal actions processed at state levels highlight lingering commitments to economic support, while dividend rebates reflect prudent fiscal management, redistributing excesses to constituents. The cost of living mechanisms integral to Social Security SSDI and SSI serve as buffers against inflation, with retrospective audits addressing historical inaccuracies. The transitional aspects of SSDI underscore the program's adaptability to life stages, whereas SSI's needs focus demands rigorous yet fallible monitoring. State variations in supplements and independent initiatives like Alaska's model illustrate federalism in action, tailoring aid to local contexts. The Extra Help and LIHEAP exemplify targeted federal-state synergies for vulnerable populations. The prevalence of confusing correspondence necessitates advocacy for clarity, but in the interim, personal vigilance is key. Awareness is non-negotiable given evolving tactics. The composite payment examples illustrate realistic potentials without overstatement, automatic adjustments, contrast with those requiring verification. State outreach represents progressive efforts to bridge enrollment gaps. Resource policy. Evolutions promote equity. Medicare. Hold harmless rules. Protect stability. Tax considerations. Promote prudence. The cumulative advice distills to proactive steps. Checking mail. Establishing online access. Investigating state resources. Assessing additional eligibility and authenticating letters. This framework, as detailed by USA Secure Benefits, equips viewers to navigate the benefits landscape effectively. To reiterate the core message these payments embody: earned entitlements and program corrections, not speculative gains. Their diversity demands discernment to avoid conflation. Social Security's annual tweaks and audits ensure ongoing relevance. SSDI's parity with retirement benefits includes transitional provisions. SSI's asset income scrutiny yields occasional windfalls. State dividends vary by jurisdiction. Low-income aids interweave with core benefits. Bureaucratic opacity calls for verification. Scam defenses are straightforward amounts, aggregate meaningfully. Adjustments are routine yet verifiable outreach aids. Access policy shifts expand reach. Medicare ties influence net gains. Taxation requires foresight. Systemic complexity rewards engagement. Actionable steps are cost-free, emphasizing the transcripts. Guidance through USA Secure Benefits lens fosters informed action.